Merriam-Webster's word of the year, gaslighting. Well, that's what markets have been doing to investors. We'll talk about that on today's 3 Minutes on Markets and Money. The Fed has been very clear over the last several months. They are going to hike rates until inflation comes down under control, and yesterday coming out saying that again. However, markets have continued to rally here over the last 5 weeks on hopes that the Fed's going to pivot. I mean, right now the markets kind of keep gaslighting the bulls into the idea that the Fed is going to pivot. They're going to pause. Yes, the Fed is going to slow down the pace of rate hikes, as was made clear yesterday, but they are not stopping or pivoting or pausing rate hikes anytime soon. That led the markets to sell off yesterday. And again, not surprising here. We talked about markets had gotten kind of the top of this recent rally, approaching that 200-day moving average. That's been very steady resistance for the markets going back to every previous peak that we've had over this year. The other side of this, of course, is there is now good support here. The 20-day and the 100-day moving average very close together right now, above the 50-day moving average as well. So downside support remains fairly strong, just below where current prices are. Now, this morning, futures are pointing a bit higher following yesterday's sell-off, but again, that's not going to get us back to where we were. We just kind of stay maintaining at this point within this kind of consolidation range of the market. So either the market's going to break out here to the upside and make a move higher. If we do get above the 200-day moving average, that does give us the potential for a further rise in markets heading into the year end. Of course, January, very strong inflow month, 401k contributions, 529s, etc., all getting funded in January. Generally why you have that first 5 days of January kind of surge, that traditional push higher. That's possible. The other side of this, though, as we break to the downside, risk are that we're going to have a bit more trouble here. And that could occur, of course, with a much more hawkish Fed statement on the 14th. Maybe a surprise 75 basis point rate hike. I'm not saying that, but if the Fed, and the Fed has been clear about being aggressive about hiking rates, that could take some of the wind out of the sails in the markets here short term. One other thing to keep a watch on as well is our MACD sell signal, which is now getting very close to turning lower. That buy signal was a very good entry point for this rally, and that's where we started talking about having a rally in the market as that signal came into play. We're now very close here for that signal to reverse. It's been a good indicator all year long about where peaks of the markets have been and good opportunities to raise cash, take some profits in portfolios and rebalance risk. Still suggest that you do that here as we get ready for what happens on the 14th as the Fed makes their next policy announcement. That could be the real risk here for the markets in the short term. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.